The following is a presentation of TFNN.
Sylvester Stallone knew his whole life what he wanted to do. For him, it was a chance to inspire others. Life wasn't easy. At birth, he was pulled out by forceps. It's why he looks and speaks the way he does. 1,500 agents said, "No, you're not an actor." His first 3 scenes led to nothing, but he never gave up. Sly sold his first script, Paradise Alley, for $100. That money didn't last long. The last thing he had left was his dog. He got $25. That was rock bottom. He cried, and soon after, watched a fight between Muhammad Ali and Chuck Wepner. Wepner went 15 rounds but was pounded to a pulp. It inspired Sly, and he wrote for 20 hours straight the entire Rocky movie. Tried to sell it, but nobody wanted it. Too predictable, too sappy. Sly saved those comments and read them to himself the night he won the Oscar. Sly never gave up. One day, 2 guys offered to buy the script for $125,000. Sly said with one condition, "I'm Rocky." "No way. We need a star like Ryan O'Neal to play Rocky." Can you imagine? The same guys called him back and offered him $250,000 not to star in his own movie. Sly said no. They countered with $325,000. Sly said no. They compromised. $35,000, points in the movie, and Sly would play Rocky. Rocky has grossed over $225 million and the entire franchise over $1 billion. What's your Rocky moment, folks? What's your vision? Your unstoppable success? You were born to be a money master. The time is now to take massive action.
Let's go over to Don in Odessa, Florida. Don, thanks for calling. Thanks for holding.
Hey, Steve. Thank you.
You bet. How you doing today?
I'm doing okay. I'm a subscriber to your service, and I would just want to let you know that I sure do appreciate what you've done for me.
Wow. Thank you very, very much.
The Trader's Edge with your host, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the October 1st. How about that, folks? Already into October. The October 1st terrific Tuesday edition of the Opening Bell on the Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, truly, that's what it's all about. So let's go look at one of our tools. This is the tool I call Man is What He Believes. Now, there was this great Russian physician, turned out to be an author, in fact, considered to be among the greatest writers of short stories. He was born in 1860, and his name was Anton, and he tells this great story. It's a story about a woman who dreamed she was being chased by a large, ugly, terrifying monster. Everywhere she ran, the monster would always be right behind her. In an attempt to get away, the woman ran into a canyon that proved to be a cul-de-sac. Uh-oh, she was trapped with her back up against the wall, and the monster came closer and closer and closer, and when the monster was within inches, she cried out, "What horrible thing are you going to do with me?" The monster looked at her and said, "That's up to you. It's your dream." Question: have you ever felt as if your back was up against the wall and that was a monster that was chasing you? Something to think about. You see, it was at that point that the woman could decide whether or not she wanted to be devoured by the monster, have the monster disappear, or better yet, turn the monster into a prince. It was her dream, and she had the power to determine how it would play out. Each of us, folks, you and I, each of us create monsters from time to time. We view different aspects of our lives that are different or unique, perhaps things that we think are wrong with us, or we spend most of our lives trying to hide those things that I prefer to refer to as qualities. That's right. The uniqueness that is inside you, it's a quality. It's a gift. It makes you special. And the last time I looked, that's not the definition of a monster. It's so important to remember that our lives are very much like our dreams. We have control over our thoughts, and therefore we can view our lives in any way we choose. If our thoughts have created a monster, well, we can choose to turn that into a positive self-image instead. Each of us, you and I, we have the potential. In fact, you are so incredibly rich. It's like an inner kingdom with infinite resources exists inside of you. Each of us has the ability to set aside any sense of burden, any apprehension, anything, and we can do it in the click of your fingers, in a heartbeat. That's right. Every tree, every flower, every blade of grass is magnificently and magically different. You, too, are magnificent and magical. Create the type of self-image that will make you happy. Make the most of your life and get rid of those monsters, because man and woman is what he or she believes. And I believe you are beautiful. Let's go check out the beauty in these markets out here. Right now, we've got the Dow futures up about 17 points, trading out at 15,063. S&P futures up about 3 points at 1677. NASDAQ futures up 7 1/4 at 3216. Russell 2000 up a point or so, trading at 1072. Goldilocks, so boy, that's down $31. That's trading out at 1295. We're going to peek in on the physical currencies, that's for sure. You've got silver down about 4% this morning, off 84 cents. That's trading out at $20.86. Light sweet crude down 71 cents, trading out at 101. Our call-in number is 877-927-6648. If you give us a call, be happy to talk to you. We can take a look at your stock chart, anything that you'd like. If we take a quick peek around the globe, the FTSE's off 28 points right now. Not that big of a deal, off about 0.4%. The DAX is up to 24 points. That's up about 0.3%. Asia mixed bag last night. The Nikkei up 28 points. Kind of a flat market. Hang Seng down 347, and the Shanghai up 15. So, where do we start out here? Why don't we go start with the market that's moving the most? Let's go take a look at silver. Let's look at Hi-Ho Silver. If you are watching us on Tiger TV, thanks so much for doing that. Maybe you're listening on the radio. We appreciate that. Or your mobile device. We appreciate that as well at TFNN.mobi. Remember, you can always catch the live stream of the show by going to the homepage of TFNN.com. Over on the right-hand side, you'll see a button, 3 little smartphone-type devices. Click on that. This show will stream live, and, of course, you can catch the archive on Channel 9. Right now, what we've got is we've got an area of support that silver is busting through. That's the bullish engulfing candle from September the 18th, the low of which was $21.22. Volume on that trading session, 34,000 contracts. So far today, we're at 24,000 contracts. We are trading below that. Of course, the ideal setup would be here is if, in fact, you could trade below this on lighter volume. Don't know that we'll do that here, but the 1-to-1 A to B equals CD projection that silver is headed for is $19.56. I suspect what it will actually do is move lower. I suspect what we will see here is larger than a 1-to-1 A to B equals CD. That would send silver down to about the 1850 level. Well, if it gets to 1850, it'll go check out that Morningstar reversal pattern. That's that 3-candle configuration that we've got here from June 26th, the 27th, and the 28th out there. That would be the low of 1818. However, silver does need to close below this B point of the A to B equals CD down. We've got a lot of time left in the trading session out here, but $21.22. Let me see if we've got an intraday chart here of silver. If we don't, we can surely make one. Let's see. You got silver. There's the December contract here. No, that's the ES Mini. You know what? Let me just do it right here. I forgot exactly which group I was in here. Let's go take a look at a 30-minute chart here of silver. Boy, look at this thing just falling off the planet here during the last hour, really from 8:30 time frame. And the big volume coming in here as we came into this 9 o'clock session. We can see here on the intraday chart really getting into the oversold territory. So silver ought to move sideways a bit. It can still move a bit lower. Let me just take a look at the last time the relative strength index got down to these levels, all the way back here in September 12th, 2013. So it's you got some big volume being pushed out of silver here. I would expect to see it just move sideways. That would be the most bearish thing for us to see, would be for silver to move sideways for a bit to work off that oversold condition. But we've got a seller in here. That is for sure. When you take a look at that 30-minute chart, if we take a look at the 10-minute chart here, we'll probably see some unloading going on. There we go. Out here. No, really all of the big selling coming in during this one trading session right here between 8:40 and 8:30 and 8:40 this morning out here. So, if silver were to bounce up to the high of 21.28. We'll see if that seller is still sitting out there right now. I would be a little bit nervous. Total of 6,200 contracts unloaded at that price point. Let's go take a look at Goldilocks. Let me put this back to the daily chart. Let's go take a look at Goldilocks, see what it is doing. It also is testing, and it has held thus far the bullish candle that came in here on September 18th, the low of which is 1291.50. So far, that's got volume of 137,000 contracts. So far, we've seen today about 103,000 contracts. So it's been down intraday, low of 1284. Let's put this on the same time frame here. Let's see if we're unloading all at the same time between that 8:30 and 8:40 session out here. So here is the 10-minute, and we are. Take a look at that volume bar. This is Goldilocks. That's between that same 8:30 and 8:40 time frame. So somebody is mustering up some cash, or somebody knows something out there. And so that is that says, and you can see it's also in the oversold territory. So at the selling began really with conviction. Well, it began right back here on this trading session. You can see his volume was picking up as we came into the 8:10 time frame, but truly began in earnest with regard to the dumping at a high of about 13.10. Right now it's trading out at 12.97 out there. I wouldn't exactly call this a buying opportunity, so don't jump in front of this freight train here, because this is a freight train that all that it's doing on any kind of bounce, as you can see on an intraday basis, it's just working off an oversold condition out here. You'd want to make sure that this seller is gone and long gone out there, and that has not been proven here. In fact, it's certainly not proven, because you're seeing that the buying on the way up is light volume buying. So back to the daily chart. What does that set up? That sets up if we see a close below that bullish candle, that bullish engulfing candle from September 18th, which was 1291.50. That's the low. You see a close below that. The one-to-one is 1233, 1194. More likely is the area. Remember, these are just target zones out here. You'd want to make sure that you could identify where the bulls were coming into being. At that 1233 level, you would have a 0.786 Gartley buy pattern. That doesn't mean you jump right in on that price. I would want to see the mere fact that there, in fact, were bulls out there that were ready to buy. That's what's going on inside the metals marketplace. Let's go check out what's going on inside the ES Mini right now. That's trading out at 1676. As we look at this, let me just remove just a couple of things here from the chart. We'll go ahead and expand it up for you. If we take a look at the 30-minute, the EKG of the marketplace, you can see that the ES Mini's been traveling in this descending price channel. Price got up to the near the gap down from Sunday evening. The low of that gap is at 1684.50. Significant resistance at the 1683 mark out here right now. What we've seen is a 0.618 retracement level by moving down into the into the 1676 range. That's coming off of the session at the close yesterday. Yesterday. Yesterday's close, the low of which was 1671. This is going to be very important descending price channel to watch. 1683 is going to be a very, very important level, because if you get a close above 1683, folks, could be off to the moon. 877-927-6648. We'll be right back.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
It's always better when we're together. Yeah, we'll look at them stars and we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
It absolutely is, folks. And yesterday, the Bears got the ball, but their back is up against the wall. How do you like that? Just made that up. Let's go take a look at the ES mini. Let's look at the longer-term charts out here. We'll start off here with the daily chart for the ES, and what we can take a look at here, when I say the back is up against the wall, we're just simply taking a look at a rising price channel. We'll pull that back here. You can see that rising price channel coming off of the lows from November 16th. Those are the blue diagonal lines that are on my screen. If, in fact, and when the ES mini begins its next move northward, what it should do is complete this nice butterfly pattern, this 1.618 butterfly pattern, as it takes price into that 1773-ish range out there, because what we do have is a confirmed A to B equals CD up inside the marketplace. So right now, as far as the pullback, all that's really taken place is if you take a look at the daily chart on the ES mini out here, price where the confirmed A to B equals CD, that came in on September the 18th out there. Nice wide-ranging bar, some volume behind it. Push price right up into the overbought territory. If you take a look at the relative strength, 14 period indicator out there. That's really the sign. That, to me, that's the best indication of being overbought and oversold. You want to take a look at the extremes on both sides of that. Otherwise, the market right now, you can see the market is neither overbought nor oversold. It just simply has worked off that overbought condition. Now, while it has done that, we can also see the price has pulled back, or very nearly pulled back to the 0.618 retracement. That would be 1663 and a little bit of change out there. Could go a bit lower and test the bottom of that rising price channel. Now, that's a very important rising price channel. That's why I say the bears, they got the ball back, but their back is really up against the wall, and it's up against the wall of a significant support area. Now, you break through that area, and that will spell double trouble out there unless price is able to get back inside of that range. So where are we? Now, that's on the daily chart out here as we take a look at as far as where there's really any kind of support level. You'd have to say it would really be this right here. This little candle is pretty important. That's the candle session from August 26th, known as a bear sash candle out there. Talk about the bears having the ball. If you take a look at that bear sash candle, the top of which is 1667.50, we can see that price yesterday came right down to that level, got down to 1666.75, rejected that area. That was a resistance level. Of course, that resistance level never really tested, but it was taken out, and it was taken out on the trading session of September the 9th. So we'll see if this area here, which it should, hold as support. And if it does hold as support, well, what that's really doing, that's really just setting up another A to B equals CD up. If we take a look what that looks like here, your A point being the August 28th low, your B point being the high came in on September 19th, and somewhere around the 1663 range. We'll just use the low of yesterday's candle for the moment. A 1-to-1 A to B equals CD. Guess where that takes you to? 1768. So now we have two patterns here. 2A to B equals CD patterns. We've got a 1.618 butterfly pattern that would take you right into that 1768, 1772, 1773 range out here. If, in fact, we see a higher close today inside the ES Mini, that'll be a pretty good indication that that move is, in fact, underway. Even if we see a lower low today, as long as this rising price channel holds, that too would be bullish. So the back is up against the wall. Now, if we switch over and we take a look at a weekly chart here on the ES Mini, and we take a look for where is the, in fact, forget the weekly chart. Let's look at the monthly chart. I mean, it is October 1st, for goodness sakes. So why are we looking at a weekly chart? It's only Tuesday. Let's just switch this over to the monthly chart. Let's go see what was the indication that we got last month, the month of September out there. Well, you can see had this nice little dark cloud cover, said that off in the distance there were some clouds. That was from August the 31st. That dark cloud cover, that got blown away. The winds came in, the bulls came in, they blew that away. So really, that is no longer, I don't take a look at that as a resistance level. So there is no, as we take a look at this chart out here, there's no bullish configuration really whatsoever as we take a look at a monthly chart. In fact, what it really wants to do is it wants to go visit the upper boundary of that rising price channel out there. So no real bearish moves in place inside the S&P futures on the monthly chart. If we do take a look at the weekly chart, we can go take a look at that. We'll see if we can find where the bears are hanging out here. You've got this bear sash candle. That's from the trading week of August the 9th. You've got another one from last week out here. That says that the area of support, well, we're going to call a breakout anything that's above 1705. So you see a move above 1705, and the other patterns that we were looking at, those will go ahead and fulfill themselves. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization execution capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
Races. We got the Dow up 10 points, trading out at 15,140. S&P up 5 at 1686. Composite up 14 at 3785. Russell 2000 up 1.5 points at 1075. Apple on the charge northward. It's up $4, trading out at 480. Microsoft up 24 ticks, trading out at 33.53. Google up nearly $10 right now, up 1%. Intel up 3 pennies. Leading the charge to the upside is Google. We've got Google up about 9.46 right now. Netflix up nearly $9 as well. That's trading out at 3.18. Amazon up $4.5. That's up about 1.5%. Edgen Group, I don't know what they are. Maybe it's an IPO. Sumitomo Corporation to acquire Edgin Group. That's a nice move. That's up 56% out there. Apple up $4. Cree, CREE, up about $4. That's up 7%. You've got Myriad Genetics, MYGN, up a nice 10% here this morning. Gulfport Energy, that's a little rocket ship. Come on, baby. Keep pulling back for me. It's not pulling back this morning. It's up 4%. Walgreens up about 4.5%, up $2.60 right now. Decker's Outdoor, DECK, haven't seen that name for a while. That's up 3%. We ought to take a look at Decker's Outdoor. To the downside, other than the gold equities here, you got Universal Display Corp. Used to be PANL, I thought, PANL. It's OLED. That's down 9% here this morning. You've got Walker and Dunlap. WD is the ticker symbol. They're down 12%. Restoration Hardware, RH. That's a nice store you can get lost in. That's down about 3% off $1.80. Diamond Foods, boy, they were getting hammered a while back, maybe last year. They're down about 10% here this morning. Diamond Foods, you've got This Bud Is For You, $1.42 is down, so down a trade down about 97.78 out there. Newmont Mining, NEM, is off about 3% this morning. Our call number again, 877-927-6648. Had a request to go take a look at RIG. Let's go take a look at Transocean RIG. Let's do this here. We'll do this in the show up section. Don't know that it's really a show up, but we're going to take a look at it. RIG is the ticker symbol. So let's begin pulling apart the RIG, see what it is doing out here. Okay, it's down at some lows. So we take a look at RIG. Let's take this back. Oh, RIG has come back to a nice breakout area. We must have looked at this not too long ago. So it came back to a nice little, this thing broke out. RIG, RIG, again, is a ticker symbol. Really broke out nicely with about 13 million shares back on January 3rd of 2013. If you take a look at January 2nd, not a ton of volume there. It was a gap up, but that next session was really the mover. So this has pulled back to that breakout area. Oh, and it's pulled back with a hammer candle. Oh, you got to like that. So we know that the bulls are out here trying to defend their position in RIG. If you take a look at that hammer candle, that was the trading session of September 24th out there, the low of which is 44.40. So those of you that would be trying to get into RIG, it's a simple buying opportunity here, because if you get a close below 44.40 and you're long, you're wrong out there, because that should be good support as this thing has come back to an area where it is broken out. It's done it on light volume. We'll take a look at the weekly chart. Of course, your problem here is this thing needs to break this descending trend line. Just the short-term one that takes you back, that's off of the high from May 17th, which was 55.79. You could use the high if you wanted to of September 18th. Doesn't matter whether you use that high or September the 12th out there. Today so far, that's the only bullish candle that we have seen. Now, what is nice, you've got this little doji from yesterday, which doesn't mean anything at support, though, but it does mean that the market is tired. You want to see the market getting tired, as it reaches a support level. You had a doji candle right out here from the trading session of September 25th out there. You had another one here on September 26th. You've had some small-bodied candles, and that's really what you want to see when you're coming back into a breakout area, is that the market is getting tired as it moves down out here. So that is on RIG. It's come back to a breakout area. That looks nice. I would say if you're really looking to get in, you just want to see it close above yesterday's candle right now. And that high is 44.68. It's trading at 44.81 out there. Let's go see what the weekly chart for RIG has. See if we can find any kind of support out here on this equity. So let's take a look at the weekly, see if we did any work on that. We didn't do any work, but boy, it's got that nice bullish engulfing candle right here. So the weekly chart hasn't been tested, but boy, you can see, and of course we were looking at the daily chart, so it's not like this is a surprise that we would expect a big bullish engulfing candle. So this says here your support, real support on this should be at about the 43.74 mark. So your stop you'd want to have your stop underneath that area. So you'd have a couple of things. You'd have the daily candle that you're looking at. You'd have the weekly bullish engulfing from a support level. No real other. Well, I guess you had. If I look over here, let me see where right here is a little bullish engulfing candle. But we're not going to worry about that. That's what I would do. Let's go take a look at the monthly, just as long as we are out here. And you can see on the weekly chart, as far as volume, that breakout session was 28 million shares, and last week you're pulling down into it 14 million shares. So even on the weekly, it's coming back with nice volume. Let's go see what else is out there on a monthly chart. On a monthly chart, let me get rid of those things that are out here right now. So on the monthly chart out here, you've also got this bull sash candle. That would really say support is this trading session, which was December 31st. So there's your 43.74 again. In the marketplace. So, not too bad. And volume on that breakout on the monthly chart, that was 102 million shares and finished last month with a pullback of 60 million shares. So the question is, when it comes to rig, doesn't look too bad. Doesn't look too bad at all out there. So that is an RIG. Let's go take a look at. Well, I had a request. Yesterday one of the things that I did was I went through monthly charts, weekly charts, daily charts, and had a couple of emails. So it came from a couple different email addresses, and the question was, would I do that for the Euro, Japanese yen? And of course, the answer is yes. Quickly, just taking a look at the ES Mini out here, just trying to watch to see if this thing is going to first break above the descending price channel and then that 1683 level out there. I do have a long position in the ES Mini, so it's one of the reasons that I'm looking. It's just a short one, but if we get above 1683, I'll go ahead and add to that position out there. So I'll be watching that during the show. I've got another screen, actually, that I'm watching that on as well. But let's go take a look at the Euro U.S. dollar currency pair out here. And we're going to take a look at it on the time frames of the monthly, the weekly, the daily, and an intraday chart out here, just to get an idea of where the euro may be headed, or at least what the charts are telling us. So let's start off by taking a look at a monthly chart out here. Now, if we take a look at the monthly chart, we just want to take a look at the trend out here. We start with the highs back in July of 2008, out at the 1.6036 level. And you can just simply use as the next touch point that trend line from May 31st, 2011. So we can see that where the euro is going to run into any kind of resistance on any move up is going to be right into that trend line. So that's on the little bit longer term view. Let's go find out where the bulls are hanging out inside of the euro on the monthly chart, and that's very clearly seen. If you look at my chart, you can see I already put in the lines of support. Those are the black lines down at the bottom. And why I say those are lines of support, simply you've got a Morningstar 3-candle configuration right here. That's the months of October 31st, November 30th, as well as December 31st out there. You can see the euro made a nice retracement after those lows were put in. It's got another Morningstar reversal pattern out here, and that's on the trading session of May of 2010, May 30th, June 30th, as well as July. So you've got some real territory out here where the bulls are just really trying to maintain these levels. So anytime price gets down there, expect the bulls to step in. Nice little piercing candle that was confirmed out here the month of September 30th, 2012. So bullish, I don't know who it's Draghi, whoever it is that's hanging out here. This is the monthly chart. Now, as we take a look at and we start coming into the current time period out here, what we have is we had this nice bearish engulfing candle. This was the session of February 28, 2013, the high of which is 1.3709. That's the number to be watching. Because if, in fact, you see it close above 1.3709, now this is a monthly chart, so you'd have to see that during the month of October out here. But if you do, that says that price is most certainly going to go test that trend line. And it may actually be setting up an A to B equals CD, would take it to the 144.27 level. Now, that's that candle. What we can also see here is we can see momentum, because any time during coming off of this low out here, coming off of the lows, let's say back in April of 2013, what we can see is any bearish candles have been taken out. You had this little dark cloud cover right out here. That's the month of May 31st. Dark cloud cover, really no additional confirmation out here with regard to those clouds on the following month. In fact, intra-month, we saw a push higher, and what that created was a shooting star. Well, both of those are really bearish reversal candles, and guess what? Guess what we had take place in September? We got to close above that shooting star high. That shooting star high, $1.3415 out there. You closed above it last month. That actually tells us with certainty that we're going to see a test of the high out here of $1.3415. 37.09, but more likely because it was able to break the bears back out there. We're more likely going to see a test of that trend line. That's what the monthly charts are communicating to us. Let's go see if we can get some type of signal here from the weekly chart from the euro-US dollar currency pair. And when we take a look at this, we'll take a look at a couple of different things. We'll take a look at, now, on the monthly chart, I went ahead and I used the trend line. That's the red line that's coming down there. So just to show you the same area. But on the weekly chart here, if you take it back, you can see this descending price channel that price has been traveling in. Now, that's the descending price channel. Take a look at the current rising price channel that price has been traveling in. That began down here the week of July 27, 2012, as we also had a nice bullish engulfing candle that was formed. We can see that the bulls are hanging out. Here's a Morningstar reversal. I don't even have that notated on the chart here, but that's the week of November 9th. The November 16th area, and November 23rd out there. So that is another area of support. You've got the area of support of this bullish engulfing down here. This is on April the 5th. We've got the same type of a bullish engulfing as price we're pushing down there on July 12th. So we can see the area where price was defended. Now that area was defended after they formed a close to a 0.786, a Gartley sell pattern, which worked for sure because you had that bearish engulfing candle. But what we can see here, that was on June 21st, as price has closed above that level. That was a bearish engulfing candle. You had a bear sash candle that's kind of tucked in right here the week of August 30th. So what the euro has done on a weekly basis, it is up and over support. What does that set up? Well, it certainly sets up a 100% move of a move. You know, normally a 0.786 failed Gartley sell pattern will turn into a butterfly. But we really didn't have a 0.786. We only had something that was close, but no cigar. So right now, that says that where price wants to move to inside of the euro is going to be that high from February 1st, 2013, out at 1.3709. So that's the area where you should see some resistance. To close above that, it'll go test the top of that either trend line or the descending price channel that the euro has been traveling in. So that's on the weekly chart. Let's go see what the daily chart shows us. So the weekly and the monthly have shown us that the euro is up and over resistance level. So we can figure out who's winning that battle. And as we take a look at the daily chart right now, one of the things we can see on a daily chart, if we take a look at that descending price channel, price broke above that area. That's the red diagonal lines that you're looking at on my screen out here. So there's a price channel, and price broke above that right here on this trading session of December 17th, 2012. Now, what happens when you break above a price channel? Price will come back and test it to confirm that it really wants to stay out. And that's exactly what happened in the early part of January. January 4th, to be specific, was the test, and we saw a move out of that area with conviction on January 10th. Moves out of there. What's it do? It comes back and tests it one more time here, back in the March time frame, March the 28th. Looks like March 27th. Really, the final test of that trend line was, or that channel line was on April the 4th. It's moved out of there. So it's done its work to the downside. Now it's going to go ahead and try to do some of its work to the upside here. We can take a look at this little bearish engulfing candle right here on June the 19th. That's that black horizontal line going across our screen. We can see that acted as resistance because it was tested. You have the June 18th high, 134.14 out there. Look at that, was tested as we came into that trading session from August the 20th. That acted as resistance. Once you're up and over resistance, that becomes support. And boy, on that trading session here of March the 19th, wide-ranging bar moving above that level. That says that on the daily chart wants to go make that 100% move of a move, probably just a tad higher, wants to at least go tag and make the smaller A to B equals CD up, and that will take it to $1.3795 out there. So we've got the daily, we've got the weekly, we've got the monthly, all confirming, at least with regard to where the bulls and the bears are hanging out, that the euro, U.S. dollar, actually wants higher price out there. So that was for you folks that actually sent me emails as far as where price is likely headed to. That took us through that entire segment. Right now, we've got the Dow is up 13, S&P is up about 6 points, trade out at 1687. When we get back, let's go take a look at, let's see, leaders in the clubhouse. We got Netflix, we got Google. To the downside, you've got Tesla, but that's only off $4. We'll be right back.
Yeah, it's always better when we're together.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Are you ready to ride the next bull market wave? Catch the Chapman Wave. Using the Chapman Wave methodology, Basil's very comprehensive daily newsletter, The Opening Call, gives the short, intermediate, and long-term analysis for the key indexes. In his Trader's Corner, he gives a brief market summary and expectation for the day with possible trades, both long and short, which are reviewed daily. A position. Subscribers sold recently for plus 42% on parts and plus 64% on rest. And Hertz Global as a core position for 6 months. A current position entered as a turnaround company is trading over 100% of its entry point as a portion sold earlier for a plus 21% gain. Subscribers to the Opening Call see the Chapman Wave techniques demonstrated and explained daily to also educate investors. Now you can get a free 2-week trial. Basil Chapman's newsletter, The Opening Call. Just visit the front page of TFNN.com.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. With the 600th weekly Gold Report issue fast approaching, Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
It's always better when we're together. Yeah, we'll look at them stars and we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
Welcome back, folks. Talk about not paying attention to the top line being the Dow out here. As we speak here at 9:54, only 24 minutes into the trading session, the Bears it looks like they tried to run the ball on first down. They got stopped. Looks like on second down here, they've been knocked back a few yards. We've got the New York Stock Exchange got net advancing issues of 965 right now. All that's needed in order for them to totally fumble the ball and maybe have a little safety out there, would be 445 net advancing issues. A lot of time left in the day, but the New York Stock Exchange here at the moment is saying, you know what, market breadth, not too shabby out here. You got a 2-to-1 advancers leading declining issues as we speak right now, so that is more bullish than it is bearish. We've also got leading, and so they're up. The New York Stock Exchange up 0.3%. The Russell's up 0.4%. There's no give up there. The Nasdaq Composite, that's up nearly 0.4% as well out there. So no real give here. So the Dow being up 5 points, we know the Dow is a dog, and it just simply, it's been the leader on the way down, and we'll see what happens on the way up. But I can tell you the market breadth right here is saying, not so fast out there. Let's go take a look at Decker's Outdoor, someone in the den. Thank you, reminding me that I mentioned that I would do that. DECK is the ticker symbol. So if we start taking a look at the monthly chart out here, monthly chart looks not too shabby at all. In fact, if we take a look at, had this nice as it, first of all, it made a 1 to 2 A to B equals CD. For those of you that own that wonderful book, The Art of Timing the Trade, when you do a 1 to 2 A to B equals CD, the market's going to do something else. In this case here, boy, it did something else. It pulled all the way back from $116 down to $28. That was taken. It did it in a short period of time. That was from November 30th, 2011. Finally made that low October 30th, 2012. So it came down. And what's that day? A 11-month time frame out there. That's a haircut. 116 down to 28. But you did have the bulls finally come in. They came in. Nice little bull sash candle out here. Got some additional follow through on that very following month out here. In fact, we have a little continuation pattern. Most candles are reversal signals. Not the case here on the trading session of March 31st. Nice wide-ranging bar. Small-bodied candles. And on the following months, the months of April, June, July, August, and then boom, in July and August, you got the continuation candle, the rising 3 out here. You're above the 0.382. Looks like Decker's Outdoor wants to go ahead and make at least a 0.618 retracement, take you up into the $82 range out there. That's on the longer term, on the monthly. That doesn't mean it's not going to run into some kind of turbulence out here. But if we do take a look at it, it's also up above a B point. That B point on the daily chart is April the 24th. That high is 60.25, so that's your B point of an A to B equals CD up. If we take a look at where that will take us to, your A point is down here on October the 31st at that 28.53 level. There's your B point on April 24th. Also was a bearish engulfing candle at retracement. Not really too shabby. It looks probably like about a 0.382 retracement. Let's go measure that area here as we take a look at it. Yeah, 0.382 retracement. So that's a powerful move that is underway inside Decker's Outdoor on the daily chart. It says 78.40, 86.80 is most likely in a range out here. I can't give you the time frame of that. And it's crossed the B point with volume here. It did it really on the trading session of September the 25th. That B point also was a bearish engulfing candle. We can see that red line going across the screen, that was resistance. Old resistance becomes new support. Support inside Decker's Outdoor is going to be at $60.25. Folks, if you're out to start your Tuesday, have a terrific Tuesday, and always remember this: you have an amazing power within yourself, and that power is so strong, it'll create a life of abundance. It'll cure incurable diseases, build billion-dollar businesses, paint magnificent masterpieces, but most of all, folks, it'll create fantastic, loving families. Thanks so much for being a part of the TFNN family. Have a great day. Look forward to seeing you soon. Take care, folks.
Yeah, it's always better when we're together.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.